As a healthcare professional, you're likely blessed with income and burdened by stress. You rarely take time to care for yourself because you're so busy caring for others. Isn't it time to empower yourself? In the Beyond Burnout Wealth and Health podcast, we show you how to balance your health and wealth. It's time to get wappy, wealthy, and happy. Join Dr. Ali Chaudhry as he shares stories and insights to help healthcare professionals better understand their stresses and stop worrying about money.
Hello and welcome to Beyond Burnout, a Wealth and Health podcast with Dr. Ali Chaudhry. Good afternoon, doctor. How are you?
I'm doing great, Eric. How are you today?
I'm excited to be talking to you. The first topic we're going to be talking about today is disability insurance. From the notes that you sent me, you were so kind to send me some notes so I can kind of prep for the podcast today. And you've got a lot of information to cover.
Yeah, we do. It should be, I think, unfortunately, we're going to have to cover this in 2 or 3 separate episodes. There's just way too much information here.
Okay. Well, where do we start with today's?
I think today we'll start with disability insurance.
All right. Yep. They're just the basics of it. So for those that are listening and I'm sure pretty much everybody has heard the term disability insurance, but can you break that down for us? What is disability insurance?
Yeah, it's a great question, Eric. So let me start by actually breaking it down into the 2 words. So I'll start first with what insurance is, and then I'll circle back and get into disability, but I'll change that phrase disability to income or paycheck, and we'll talk a little bit more about what that means.
Well, it would be nice to be able to turn disability into paycheck. So we'll start with insurance. So let's go to the basics of that. What's insurance?
Great. So what is insurance? That's a great question. And I think in today's day and age, the first thing you have to do is go to Google and find out what Google says. So if you Google insurance definition, it comes up with a pretty complicated explanation of what insurance is. Mm-hmm. And the first thing that tops up, it says it's a practice or arrangement by which a company or government agency provides a guarantee of compensation for specified loss, damage, illness, or death in return for a payment of premium. Now that's a mouthful, and It really doesn't help me understand what it is. So the next best thing you got to do is you go onto Wikipedia and see what that says. So Wikipedia actually nails it from my perspective for what I think insurance really is. And the very first description, it says insurance is a means of protection from financial loss. So you remember from the introductory podcast, so I said at that time, the one thing I wish I could really teach people more than anything else is the concept of protection first. So even though the Wikipedia definition is great, for me, the way I see insurance is essentially at its bare minimum, it's a transfer of risk for a fee. So what you're doing is transferring risk from yourself to a different entity for whatever amount of monthly fee it might be.
Got it. Okay. And the monthly fee depends on what you're covering as far as a risk, correct?
Absolutely. It depends on what you're covering, how much you're covering, and so forth.
Okay. So everybody needs to protect themselves one way or another. And some of it's, some insurance is regulated, right? Like in most states, you have to carry auto insurance if you're driving an automobile. But not everybody has to have every kind of insurance. I mean, some insurance isn't mandatory, correct?
Yeah, that's correct.
All right. So what I've heard the term self-insurance. What is self-insurance? If you could explain that to me.
Self-insurance is a great concept and it's a wonderful question. And I think what I'll do is I'll come back and answer that at the end, and I'll explain to you why I think self-insurance makes no sense. But I think before we do it, let's talk a little bit about what you just mentioned, the different types of insurances that you have. Mm-hmm. So I have a house in Florida. I have a couple houses in Florida. And if you've been watching the news, the last 3 years straight, where I live in Palm Beach County, we were supposed to be hit by a Category 4 or Category 5 hurricane every year, but luckily it missed us each time.
Nice.
So when it comes to the concept of insurance, when I say, okay, I want to transfer risk. So in this case, I live near the water, so I have flood insurance and hurricane insurance and wind insurance as well. What that means is I pay roughly about $5,000 a year. And what I'm saying is that for that amount of money, what I'd like to do is transfer the risk of damage to my home to an insurance company so that in the event something happens, I'm not left out hanging.
Yeah, because the house itself is going to be way more expensive than $5,000.
Absolutely. So let's say, argument's sake, the last 3 years, all the hurricanes missed us. So I spent $15,000 and have nothing to show for it. But if any time in the next 3 or 4 years, if it's a total loss, or if I have flood damage or wind damage, the roof is torn off, it'll cost me a lot less than $15,000 what I paid out of pocket than if I had to go and pay for it myself.
Yeah, absolutely. And the fact that, I'm sorry, but $15,000, that's 3 years of sleeping better, period. I mean, I've seen the news. I don't live near Florida, but I saw all the warnings and I saw all the hurricanes that have been stirring up and missing you, thank God. But yeah, to be able to sleep well at night, that's worth $15,000 for 3 years worth of sleep.
Yeah, absolutely. And so Eric, you asked me what other types of insurances can you have, and is it mandatory? So that reminds me of actually when I graduated medical school. I remember one of the most exciting, other than the White Coat ceremony from med school, one of the most exciting times in med school was when I finally graduated and I got that medical diploma.
Mm-hmm.
I remember when I went to med school, they gave us the diploma, but along with it, we got a really nice frame to hang it up in. Had the school colors on it, had the emblem for the medical school, the name on it. And I remember the first thing I did when I went home, showed it to my parents, stuck it in the frame and hung it on the wall.
Nice.
And what I didn't realize at that time is I was actually protecting the diploma by putting it in a frame so nothing bad would happen to it.
Mm-hmm.
And what I didn't think about at the time, but I started to understand today, and one of the reasons I want to change the word disability to income is that this diploma is now generating all the income that I was going to now produce for the rest of my life. And it got me to thinking, if I'm protecting the diploma, wouldn't it be a good thing to also protect that insurance as well?
Yeah, absolutely. So I assume that you're leading up to the disability insurance that this is obviously the entire podcast is about at this point. But I really liked what you said earlier about disability, changing that word to income. So let's break that down, because that's much more exciting than having a disability.
Well, yeah, absolutely, Eric. And even if you did income or paycheck, I think it makes more sense in the context of what insurance is, which is transferring risk. So if you think of your income, it's for anybody out there, whether you're a new graduate, nurse, physician, or you've been practicing for 5-10 years, income is the foundation of all your future goals. Your income provides your lifestyle, it supports your family's needs, and it does at the same time help you secure a financial future. Now, what's becoming really popular I think amongst most people in healthcare, but especially young physicians, is the concept of FIRE, financially independent, retire early. And I talk to a lot of physicians about this. It's a great idea. Hey, let's retire in our 40s or 50s. Let's have a great lifestyle. But how will you get there if your income suddenly went away?
Yeah.
So when I like to talk about disability, that's something that people don't really have a good concept of. But everyone has a really good concept of a paycheck that you get every 2 weeks. Everyone has a great concept of their income. So if you flip that into income being protected, and you're now transferring the risk of loss of income to another company, it makes more sense than just to call it a disability.
Got it. Yeah. No, that makes a lot more sense. So the purpose of disability insurance is obviously you're insuring yourself and your future potential income, right?
Yeah, that's correct. I think the cookie cutter definition of disability insurance is it's a monthly benefit that you as the insured will receive if you're unable to do work, whether it be secondary to injury or illness. But I think the real life practical definition, especially in the context of the way I like to use insurance, is that it gives you a protection of again, for I think most young healthcare professionals, your greatest asset, which is your ability to generate income. Eric, there's 2 books that I really like. One of them is called Rich Dad, Poor Dad by Robert Kiyosaki.
Yep.
Now, I thought it was a great book when I read it. Apparently it's controversial. I think everything today is controversial no matter what you do.
Exactly.
But again, I didn't think this book would be controversial. But the only thing I want to talk about that and hopefully avoid controversy, it defines an asset in the book as something that puts money into your pocket, and a liability as something that takes money out of your pocket. So I like that definition because, again, in the context of income insurance, it makes a lot of sense. You want to ensure that income that's coming into your bank account every month is protected. The second book that I like, it's a quick read called The Richest Man in Babylon. You could probably finish the book in under 2 hours, I bet. So that's a book by George Clason from 1926. Interesting book. It's almost 100 years old, but still very relevant today. The way the book's set up is it teaches lessons through parables set in ancient Babylon. So it's got 9 different lessons that they teach in the book. But the one I want to focus on is that the 4th cure, the way he talks about it in the book, is to guard your treasures from loss. And essentially, again, back to a protection first philosophy. So let me just give around a couple numbers by Eric. I think this is a little interesting.
All right.
So now most physicians don't start their career till their 30s. Same thing with if you're a nurse practitioner or a pharmacist. But nurses typically start their careers earlier on, mid-20s or so forth. So if you took someone who was 30 years old, made about $50,000 a year, and if you keep working until you're 65, you're now going to generate over $2.5 million of income over that time frame. That sounds like a lot of money. $50,000 a year doesn't sound so great to most people, but $2.5 million sounds great to everybody.
Yeah.
So it comes back to, again, this whole concept. If I was going to tell you you're going to have $2.5 million between now until you retire, would you not want some sort of guarantee that that money comes to you no matter what? Or would you want to take a risk and say, maybe I'll lose it, maybe I won't?
Yeah. No, that's a good point. So, Dr. Ali, are you a Marvel fan?
Marvel, yeah. How'd you know?
Well, I think most people are. But Doctor Strange, right? So Doctor Strange in the movie got in a terrible car accident and basically destroyed his hands, right, in the movie. And I think about that. When I think about disability insurance, that not all of us can go become some intergalactic wizard or whatever he did become, but he lost the ability to perform surgery. And that was his bread and butter. That was his joy. That was his talent. And so he crashed and burned literally after the car accident. He crashed and burned emotionally and mentally and everything else until he sought out this other intergalactic wizard or whatever. And yeah, everybody else can go watch the movie. But not all of us are in that category, like a surgeon, brain surgeon, I believe is what he was. So do you consider disability insurance a luxury, something that the wealthy can, doctors and singers, I can't remember who it is. I'm sure, well, it's a model of some kind, but she's got her legs insured, right, in case something happens to her legs. I could definitely have my voice insured, but see, I just don't have the kind of income that I think that I would need to have disability insurance like that. So is it a luxury? Is it really a necessity?
No, that's a great question. So I think disability insurance for sure is not a luxury. I think it's a necessity, and I think it's a critical part of any financial plan. Reason for that is, as a physician in my day-to-day work, what I've come to realize is that the reality of this is that we're all vulnerable. And looking into some of the numbers, what I actually found out is that 90% of all disabilities are actually caused by illnesses, not accidents.
Really?
Yeah, and this was from the Council of Disability Awareness back from 2014. They did a review on all the claims, and that's what they realized. I was a little surprised. I didn't think the number would be that high.
Yeah, me neither.
Again, I think you always think of disability, you think of that Doctor Strange where you get into a catastrophic car accident or something bad happens.
Mm-hmm.
The other thing I realized, and this really shocked me, at one point I reviewed I was doing this I'm not even sure why, but I was reviewing some cases for the disability for Social Security through some secondary company. And doing my homework on that, what I realized is that today, 1 out of 4 adults that are 20 years old today will become disabled before they retire. And that's based on the U.S. Social Security admin fact sheet from 2017. And
Wow.
That number's high. It doesn't say how long the disability will be, but you'll be at least disabled at some point. I thought 25% was pretty high.
That's crazy high.
Yeah, I agree. And the interesting part about it is what I mentioned earlier. Insurance, again, you want to transfer risk to somebody else. I talked about income being a foundation for your financial plan. And on this foundation, you have to have insurance. So again, like I mentioned earlier, so if your income went away, a lot of what you're trying to create, not just financially, but your personal goals, your family's needs, your lifestyle, all of that would be at jeopardy of going away as well.
Mm-hmm.
So that's why I think this concept of self-insurance doesn't make as much sense, especially if you go back and look at the example of my house. It doesn't make sense for me to save $5,000 a year and then get hit by a hurricane in a year or two from now and then lose my whole house. So to me, I don't like the concept of self-insurance as much, only because I think what you're doing is you're not transferring risk to another entity. You're keeping all the risk on yourself.
Yeah, that's, wow. I mean, something that just really, really stuck with me is the 1 in 4 of today's 20-year-olds will become disabled before they retire. I think we spoke about this before the last podcast. I just went to Mexico with a group of friends that we've known for a long, long time. There were 8 of us. And I'm just picturing us every night down in Mexico. We would go to a different restaurant and sit around the table and eat and talk and break bread together. And I'm looking around that table as we're talking, or as you're talking, and looking at 2 of those people. All of us work. Every one of us works. None of us are stay-at-home moms or stay-at-home dads. I don't think any one of the families sitting around that table could take one of their partners, one of the spouses being disabled and not being able to replace their income at this point. That would be hard on any one of those families. So you really gave me a ton of food for thought. But if somebody doesn't have disability insurance, like I have no idea if my friends do, what are some other ways to protect income? Are there other ways that you can protect income?
All right. So I think it's a good question. I think one of the ways you can do is through your savings account. I think most people would love to say they have about at least 6 to 12 months of paychecks or expenses sitting in the bank.
Mm-hmm.
So let me give you actually a real life example. I have a friend of mine who makes about $450,000 a year. He has about $100,000 saved in his bank as an emergency fund. He and I were sitting down, kind of going over just his expenses. for what he has to pay every single month, no matter what. Between his mortgage, his student loans, his 2 cars, he spends about $11,000, give or take, a month, which is a lot of money.
Mm-hmm.
And I was just kind of going over that. If he were to be disabled for 6 months and had no insurance to make up for the loss of income, in about 6 months, his savings would be depleted to about $31,000.
Mm-hmm.
The other option is he could give up a lot of his lifestyle. If that disability now prolongs further and lasts 12 months or 18 months, all of a sudden he's running out of money and he has to now decide, does he want to give up a house? Does he want to give up a car? What becomes a necessity at that point? Whereas the alternative is you've paid a monthly fee, transferred risk, and you preserve your lifestyle, you preserve your income. The other option I mentioned earlier is Social Security. So Social Security is interesting. Most of the claims that are filed initially are denied. After appeals, about half of them are approved.
Mm-hmm.
Now that sounds great until you actually sit down and realize how much money are you receiving every month from the government. So the average monthly benefit right now comes out to about $1,165.
Mm-hmm.
And this is before it's taxed.
Yep.
So you can go from having an income of $450,000, depleting your savings, and then barely living above the poverty line.
Yeah, and just, I mean, I actually have experience with that because one of the young men that I worked with when my wife and I worked at Boys Town, he had some disabilities and got on to disability through Social Security for a time and barely was able to make it just in a studio apartment. And anytime he wanted to do any work, they would count that against him, and he would lose funds and things. It's ridiculous how the system works. Nobody can, in my opinion, now this is my opinion only, nobody can survive on that. I mean, it's just insane. So I don't even want to think about having to do that in any point in my life. Yeah, that's crazy.
Yeah, I agree. I think at some point, once you get to a certain expense, when you have a certain amount of expenses and you get used to a certain lifestyle, it's really hard to go backwards. And sometimes you're forced to go backwards.
Mm-hmm.
So I think that the other option is you could always start liquidating your assets, which I think doesn't make sense at all. If you had a choice of either having insurance or self-insured and liquidating assets, I think buy the insurance makes more sense. And I'll give you a great example. I bought a rental property in Florida under a similar situation. The owner had some financial issues. They had to sell their home. I actually ended up buying it almost $45,000 less than listing, only because of the situation and the necessity to really unload this property. And so when I see things like that, it always reminds me that I don't want to be the one liquidating assets. I want to be the one that's protected and comfortable. And hopefully when the situation and time comes around, I'm protected.
Mm-hmm. Dr. Ali, I mean, I think what you just said is ringing true for everybody in the audience, that when the time comes, if something were to happen, I would hope that I would be protected. Have you personally seen, I know that you mentioned your sister earlier, and you spoke about her on the very first podcast as well. And if you have not heard that first podcast, I'm talking to the audience, obviously, go back and listen to it. It was fantastic. It really gives you the foundation of how Dr. Ali got into this business and why he's doing what he's doing. So go back and listen to it. But Doctor, you spoke about your sister. Do you have any other examples of people that you've seen or worked with that have been in a situation where disability insurance was a lifesaver, or it was a regret because they didn't have it?
Yeah, I think the lifesaver is absolutely the example of my sister. And I think if you haven't heard, she's a dentist by training, a few years younger than I am. And during dental school, I was actually diagnosed with a brain tumor, had a pituitary adenoma. Thankfully, at the time, she had already purchased disability insurance.
Mm-hmm.
So she had brain surgery, graduated dental school almost on time. And then a year later, about a year and a half later, had another recurrence and had a second brain surgery as well. And at that time is when it really affected the optic chiasm. And she was worried about having double vision. And once you have double vision, it's really hard for you to be a dentist.
Yeah.
And that's when I realized, when she told me, obviously she was very upset about what was going on. But she had said at the time that she was glad at least she had disability insurance. She was worried about her student loans, how she's going to pay her expenses. But it was nice to know she was protected.
Mm-hmm.
And now the interesting thing, I mentioned we're all vulnerable. I see patients every time I work, guaranteed at least one patient a day that I visit with who had no idea they would be in the hospital that day. There's some patients you see that have some chronic medical problems. They're going to be coming back to the hospital on a regular basis. They're used to it. They know how the hospital works. But at least one patient every shift at work either had been fairly healthy before, had no expectation of seeing me that day at all in the hospital, was going about their day as usual. The one that comes to mind is I saw a patient about 2 weeks ago in the hospital, 37-year-old cop. And I was working out in the Midwest and he was visiting to go pheasant hunting. It's a big thing out in South Dakota to go pheasant hunting.
Hmm.
So this guy's 37, he's a cop. He ends up just having a seizure when he was out having dinner with his friends. Comes to the hospital, ends up being diagnosed with a brain tumor. Now, all of a sudden, this really impacts his life. He asked me the question right away. He goes, Doc, if you're telling me I can't drive, how am I going to still be a police officer? So, well, can you do a desk duty? He said, no, we're with the part of the country he's from. He goes, we really don't have that.
Yeah.
So all of a sudden, this guy's 37, he's married, he has a kid, and he's worried about how am I going to get through all this? One, you're telling me I have a brain tumor, I might need brain surgery, and my income goes away. So I remember he and I were discussing what he was going to do about it. And his wife just said, hey, open enrollments now. Should we sign up for things? I'm like, talk to HR and sign up for whatever you can get. So that was actually interesting. This is a guy that he said, well, I never thought about buying anything before because I'm so young.
Mm-hmm.
The other one, it's really interesting. I haven't done this. I end up hearing a lot of interesting stories from young people. There's another one. She was about 31, 32 years old on family medicine practice, was having some bad headaches and ended up getting an MRI and just incidentally was diagnosed with a brain aneurysm. Had it clipped, everything was fine. But I think being a physician and knowing what can go wrong with the brain aneurysm, all of a sudden things get real.
Yeah.
So now she was actually actively trying to find a disability policy to protect herself. And I think she had maybe 2 kids, maybe 3, I don't recall. And I remember I connected her with a buddy of mine that sells disability insurance. And he kind of looked almost at the entire country, almost every carrier out there. And she just wasn't able to get covered because her risks and what was going on in her personal life with the complications were just way too high. And I thought about it. If this young doc had purchased disability insurance 5 years earlier, before anything happened, would have been a great time to do it.
Mm-hmm.
So it kind of reminds me of this whole idea back again, self-insurance, not buying it, taking your chances. That doesn't make as much sense when you think about how much you could potentially lose.
Yeah. Yeah, absolutely. So let me ask you this. Actually, that brought up a question for me, and maybe you know it, maybe you don't, but I think you will. So my mother-in-law, back when I think my wife was probably about 7 or 8 years old, she had a brain aneurysm. She almost died, and I don't think at that time. Let's just say at that time she wasn't working because she was a stay-at-home mom raising 3 kids. Now all the kids, my wife is the oldest, so 7 or 8 years old, and then the 2 next are about a year apart. So imagine having a 5, a 6, and a 7-year-old, and she had a brain aneurysm. My father-in-law worked for the Border Patrol full time. Is there disability insurance for someone who's not actually working? Is it possible to get some sort of disability insurance in case something like that happens? Now, my father-in-law would have to deal with, maybe it was daycare. I mean, they had family that were able to help, but not everybody has that situation. Maybe they'd have to deal with daycare. Maybe they'd have to deal with in-home nursing or whatever the case may be. Is there disability insurance for somebody who's not employed?
So I'm not sure if it would be called disability insurance, but there's a lot of different insurances that can cover, for example, long-term care, et cetera.
Mm-hmm.
And I think instead of answering it quickly, we can actually dedicate a whole podcast episode to that because it's becoming a more and more common situation now. And I see this all the time with our patients that need long-term care, whether it's at a rehab, nursing home, swing bed. It's really expensive now.
Oh, yeah. Yeah.
And what I've noticed is the patients that have no problem with this are the ones that either have done really well financially and can afford to pay for it, or those that have actual insurance that covers these needs. The average person I see go through this, the first thing that they ask me is, I need to go to a nursing home. How much is this going to cost? I can't afford it.
Mm-hmm.
And now you're choosing in between going to a facility that can take care of you or going home where you're going to be unsafe because there was really, at the end of the day, not proper planning done.
Yeah. All right. I'm going to hold you to that. We're going to have another podcast specifically on that and find out more. But for today, we're running out of time. Do you have any closing thoughts?
Yeah, I think you should think of insurance as transferring risk for a fee. I think, like I said in the first podcast, protection first is the mantra I live by. I think you always have to protect against the downside. The upside, the potential for how much money you may make, whatever the rate of return is, that's all hypothetical. But you always want to protect the downside before anything else.
Got it. All right. Words to live by. And I just want to thank you for your time today. I appreciate it. And I want to thank you all for listening to the Beyond Burnout, a Wealth and Health podcast with Dr. Ali Chaudhry. If you have not subscribed to the podcast yet, please click the subscribe now button below. This way, when Dr. Ali comes out with a new podcast, it'll show up directly on your listening device. This makes it much easier to share these podcasts with your friends and family. This is a great one to share because then you guys can have that discussion. And I'm really interested to have this discussion with my 7 other friends that we're all down in Mexico together, because I don't know who has coverage and who doesn't. I'd like to pick their brains a little bit. So again, thanks for listening today. For everyone at Northeast Financial Network, this is Eric Johnson reminding you to live your best day every day. And we'll see you next time.
Are you overwhelmed with all of the information out there about health and wealth? How does it all connect? Subscribe to our podcast and learn more as Dr. Ali Chaudhry shares how to be wappy.
Ali Chaudhry, MD, is a financial representative of the Guardian Life Insurance Company of America, Guardian, New York, New York. Northeast Financial Network is not an affiliate or subsidiary of Guardian. California license number 0M42495, Arkansas license number 100160969. Not practicing physician for Guardian or its subsidiaries or affiliates. The information covered and posted represents the views and opinions of the guest and does not necessarily represent the views or opinions of Northeast Financial Network. Guest speakers and their firms are not affiliated with or endorsed by PAS, Guardian, or Northeast Financial Network, and opinions stated are their own. The content has been made available for informational and educational purposes only.